Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. Well, so far I've had one good one, and so far one not so good one. That is from the Tall Boy Brewery in Preston, Victoria, just so you're not confused. Well, let's have another look at one. What's this one called? Bangkok Midnight. Yeah. See what the power of diversification can do. Life is a numbers game, and beer drinking is no different. Let's get it on. Crack it! If I can find it. Whoa, it's a big one. It's better than last week's. Better than last week's. Maybe it'll grow on me. This week it's all about the big picture, the small picture, and everything in between. Yep, what gems we can pick up from the big tech sell-off, the economy, and what's going on with lithium. So it's got some big subjects to get through. I mean, the All Ords has come off around 6% this month, but the selling in technology has been consistent and hard. And that's been going on for some months now. I mean, some of these stocks are down 80% more. So that's what we've been focused on, looking through the rubble. And it's our 500th issue to boot. Let's have a toast with this Tall Boy Bangkok Midnight. Cheers! Yep. Okay. Interesting. Look, we all know the name of the game. Buy low, sell high. But let's face it, buying low has been difficult. I mean, for a very long time, for years in fact, it seems. But now, it's not going to be easy, but it's going to be much easier. So the opportunities are everywhere. I mean, we've put together this list over the past year of 200 plus stocks that we thought were really interesting, but just too expensive. And now we're going through them. We're going through them like a shark through a school of mullets. So now that they're at much lower levels, we're looking at companies that have been hit a bit hard. And let's face it, some have been oversold because 30 June's coming up. Baby, out with the bathwater stuff. So we've found 5 new stocks. 3 of them we rate as buy. One I particularly liked, it's a med tech that I've been looking at for quite some time. In the same vein as Pro Medicus. I really like its subscription business model. I like its strong balance sheet. I like its global footprints. It just has to put the runs on the board and get those contracts. The other one is a small cap, is also about database management. Whereas the medtech's focused on imaging, the other one's more about virtual data rooms. So these stocks are bouncing, so you should check them out. The third's also bouncing, but it's manufacturing focused. So it's got a carbon fibre technology that makes wheels quieter and lighter, perfect for electric vehicles and everything in between. So let's beat around the bush. The big picture, as always, is highly interesting, but what it all boils down to is that stock picking is so important because interest rates are rising. If we didn't know it for sure in the domestic market, this week's national accounts certainly made us aware that it was happening. I mean, nominal GDP, like a lot of them talk about net GDP, but nominal GDP, which is the proxy for aggregate demand, so dollars spent, has been growing at over 10 years. Sorry about that. Over 10% in the past 12 months. The economy's running too hot. Interest rate rises are going to continue. Mark my words. So what does that mean? It means you need quality stocks for your portfolio for protection. Our blue chip portfolios outperform the index, the ASX 200, by over 12 percentage points in the past 6 months. It's returned 22% a year for the past 2 years. Hunting for value has proven to be the right strategy after all. it's a long-term strategy, and it's based around getting a good night's sleep, because let's face it, it's what we all need, and you get a good night's sleep when you're investing in quality at the right price. So that's on the one hand. On the other hand, you need to take advantage of the fear, which I was talking about before with the big tech sell-off, exacerbated by 30 June. Speaking of which, what about that lithium sell-off? That was huge. I mean, Peter Chilton's written a note on it that we've sent out to our subscriber base. But basically, in a nutshell, Goldman Sachs wrote a negative report, forecasting a sharp correction over the next 2 years, signaling the end of the bull market. Well, we don't agree with this, but I'm going to come to that in a second. The second point is that there was a perceived change in the lithium pricing formula in Argentina. They thought it was going to be price cap, but actually it was simply a pricing mechanism to ensure that the government gets its slice, basically a tax formula. The third, there's a Chinese company bought some big lithium assets in Africa, but they didn't say what they were buying, so it could be anything. The markets initially thought, open the floodgates, there's going to be a lithium, there's going to be lithium flooding the market. But, the fact is, lithium is very hard to produce, very technical, and costs a lot of money, takes a lot of time. So it's not so simple as turning on the tap. Just in relation to what Goldman Sachs was saying, well, I think the point about lithium is it's not on an exchange-traded market. So basically, a lot of the price action has been small parcels. It's very illiquid, but that are much lower than the average prices. Look at Pilbara Minerals. They've got this BMX exchange. Basically, you're seeing some prices way and above that are exchange traded what they're actually receiving, the average price they're actually receiving. So it's a bit illusory. But the big point to make is about lithium. Right now production is running about 600,000 tons lithium carbonate. And we've said over $42 billion of investment needs to occur for it to get to the expected demand, over the next few years of 2.4 million tons a year. And then, it's going to keep going from there. So that's a fourfold increase over the next 5, 6, 7 years. And that's a big catalyst for, increasing interest, increasing investment in lithium, and basically for the lithium price. We like the big guns, we like the Pilbara Mineral, we like the Allchem, but we also see, we see a lot of interest. Well, we also like, the emerging producers, one of which we covered the other week, that's just about to commence production. So there's quite a number of those emerging producers that we also like. What's coming up? Well, let's just have a toast before I run off at the mouth again. Yeah. Interesting. We've sent our lithium report to subscribers. Our blue chip portfolio has been updated, and we're finding more and more beaten up tech stocks. We're having the time of our lives. I'll talk to you more about these things next week. Cheers.